Howdy, everybody. Welcome to Liberty Call. Today is Monday, October 16th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is a much happier day in the markets. I see lots of green here domestically and over in Europe. Not so much in the Asian markets overnight. They got pummeled, looks like pretty good. But for us here in the Americas and Western Europe, it all looks all right. I hope everybody had a good weekend out there. Baseball, the championship series started for the American League last night. Did not go as expected, unfortunately. But game 2 is tonight, or this afternoon, starts in about 20 minutes. So I'm going to try and get through this real quick so I can go watch some baseball and play with my buddy Jake back here. So then I got some meetings tonight, so I can't let loose too much. Anyways, all right. Well, if it is your first time watching Liberty Call, I am glad you are here. Thank you very much. If you could do me a favor, if you could give me some thumbs up, like, share, subscribes, follows, send this off to some friends who might be having trouble with their finances, and hit that notification bell so you know when I go live. All right, let's get into the numbers. Dow Jones was up 0.93%, 314 points, closed at 33,984. S&P 500 was up 1.06%, closed at 4373. NASDAQ up 1.2%, closed at 13,567. The VIX fell 10.92% today. It's back down to 1721. Canada was up 0.81, Brazil was up 0.8, and Mexico was up 0.91. Over in Europe, Germany was up 0.34%. The UK was up 0.41. France was up 0.27. The Netherlands up 0.2, Spain up 0.59, Italy up 0.55, Switzerland down 0.1%, and Portugal up 1.21%. Russian exchanges both in the green today. The MOEX up 1.33, the RTSI up 1.25, and the overnights, the Nikkei in Japan was down 2.03%, Australia was down 0.35, New Zealand down 1.25. In China, the Shanghai was down 0.46, the Shenzhen component down 1.42, China A50 down 1.02, DJ Shanghai down 0.67, Hang Seng down 0.88, and the Taiwan weighted finally open down 0.78 overnight. So, like I said, mostly happy markets, but the angry ones were over in Asia, so I'm not sure what happened there overnight. Didn't dig into it. Got a bunch of other stuff going on today, so did not get a chance. All right, well, let's go ahead and dive into the weekly economic update. Stocks ended mixed last week amid the outbreak of hostilities in the Middle East and higher than expected inflation data. The Dow Jones Industrial Average gained 0.2%, the S&P 500 rose 0.45%, NASDAQ slipped 0.18%, and overseas advanced to 0.37%. Inflation hurts the sentiment. Stocks exhibited remarkable resilience in the face of a surprise attack on Israel and hotter inflation data than investors expected. Stock prices initially buckled on the outbreak of hostilities in the Middle East. Still, they rallied in the afternoon trading as investors gained optimism that the war may not spread to other countries. Oil and defense stocks rose sharply while airlines fell. Stocks continued to advance into Wednesday as falling bond yields and a retreat in oil prices overcame the disappointment of an elevated wholesale inflation report. When consumer prices also came in higher than anticipated by Wall Street, stocks moved lower in response to higher bond yields. The weakness continued into Friday on a bump in consumer inflation expectations, despite a solid start to a new earnings season. The PPI and the CPI updates, the disinflationary trend appears to be stalling if the inflation numbers are any indication. September's producer price index came in higher than expected, rising 0.5% versus the forecast of 0.3%, while the year-over-year increase of 2.2% was the most significant jump since April. The driver of last month's hop was in goods, which surged 0.9%. Consumer inflation data followed, which came in hotter than forecast. The CPI rose 0.4% in September and 3.7% year over year, above the forecast of 0.3 and 3.6 respectively. The news on core inflation was a bit more comforting, rising in line with expectations. This week's key economic data: Tuesday, tomorrow, we have retail sales and industrial production. Wednesday is housing starts. Thursday is existing home sales, jobless claims, and the index of leading economic indicators. We have a host of companies reporting earnings this week. Monday, we have Charles Schwab. Tuesday, we have Bank of America, Johnson & Johnson, Lockheed Martin, Goldman Sachs, Prologis, and J.B. Hunt transport. Wednesday, we have Netflix, Tesla, Procter & Gamble, United Airlines, Abbott Labs, Morgan Stanley, and Elevance Health. Thursday is AT&T, Intuitive Surgical, Blackstone Inc., CSX Corporation, Union Pacific, and Fremont McMoran. And Friday is Schlumberger and American Express. All right, so that's the update for the week. Are y'all excited? I know I am. All right, let's get to the market recap for today. S&P 500 jumps as big tech soaks up demand, shrugs off rising Treasury yields. Rising Treasury yields are not a big deal until they are. So we'll see. I'm sure as Treasury yields continue to bump up, tech will continue to fall. All righty. On Monday, the S&P 500 experienced a rally with big tech leading the way despite a continuous rise in Treasury yields. Notably, Microsoft and Alphabet performed well, with investors seemingly unconcerned about the increasing yields. However, Apple faced pressure due to concerns about lower than expected sales of its iPhone 15 in China. Jefferies noted a double-digit percentage decline in iPhone 15 sales compared to its predecessor, partly attributed to strong competition from Huawei's Mate 60 Pro. Athleisure maker Lululemon Athletica saw a 10% rise as it prepares to join the S&P 500, replacing Activision. This change is anticipated to generate additional interest and buying activity, according to Oppenheimer. News Corp experienced a more than 3% increase following reports that activist investor Starboard Value had increased its stake in the media company. Starboard Value is reportedly advocating for strategic and governance changes to enhance the company's share price, including the sale of digital real estate businesses like Realtor.com. Charles Schwab reported mixed third quarter results, with revenue falling short of estimates. Despite concerns about deposits, the decline wasn't as severe as feared. The brokerage firm's shares have seen a nearly 40% decline year to date, impacted by clients moving cash into high yield products. Pfizer, despite cutting its full-year guidance on earnings and revenue, received an upgrade to buy from hold by Jefferies. The pharmaceutical giant's plan to cut $3.5 billion in costs is expected to support earnings. Pfizer shares rose by 4%. The company had previously warned of a $5.5 billion in write-downs in Q3 related to lower than expected sales in its COVID-19 vaccine and treatment. Well, that's shocking. I mean, I heard a statistic today that only 2% of Americans actually got the most recent COVID jab. So I'm shocked that 2% is that dumb to even do it. But hey, if y'all want myocarditis, have your way. Let's finish this up. Other COVID vaccine makers, including BioNTech, Novavax, and Moderna, face declines amid concerns about slowing vaccine-related sales. Well, that's probably because the government's not picking up the tab anymore. So when the government's paying for everything, people are like, hey, stick that in my arm. Give me a Band-Aid. Give me two. I want to show off to all my leftist friends with blue hair. All right. One last article here. Big government weighing on growth. This comes from First Trust, Mr. Brian Westbury, their chief economist. Let's see what he had to say today. All right. The U.S. economy is expected to show robust growth of about 4.5% annually for the third quarter, according to preliminary estimates. However, analysts caution that this figure masks a slower underlying pace, with an average growth rate of 1.9% from the end of 2019 through the third quarter. This pace is considerably lower than the growth seen in the 1980s and 90s. Policymakers are urged to focus on raising the long-term growth rate, but current trends suggest an expansion of government and increased redistribution rather than policies fostering economic growth. Well, those government jobs are going away sooner than later. Keep your fingers crossed out there, patriots, because hopefully sooner than later that government goes away. Government spending is a significant factor, with federal spending estimated to total $6.131 trillion for the fiscal year that ended September 30th. Boy, we're only bringing in less than $3 trillion in tax revenue. So where's that other money coming from? I don't know. Oh, they print it. Yeah, that's it. The Congressional Budget Office notes that this includes the effects of the Supreme Court's decision to strike down much of President Biden's plan to forgive student loans, which he didn't have the authority to do, creating a $333 billion negative outlay for fiscal year 2023. Yet they still spent $6.131 trillion. Awesome. Without this decision, the total federal spending would have been $6.464 trillion, or 24% of GDP. This upward trend in government spending is highlighted by historical comparisons. In fiscal year 2019, federal spending was 21% of GDP, and in 2000, during the peak of the first internet boom, it was 17.7% of GDP. Higher interest costs contribute to this increase, but the overall trend is concerning. The analogy of an island economy is used to illustrate the potential consequences, emphasizing the excessive taxation can erode incentives for innovation, maintenance of capital, and overall economic growth. The concern is that if spending isn't brought under control, taxes may rise significantly, leading to a bigger government, less innovation, and reduced economic growth. The commentary underscores the importance of maintaining a balance between government spending and fostering an environment conducive to economic dynamism. Whew, that's a big word. All right. So Mr. Westbury seems to think, and I wholeheartedly agree, that the government should spend less money so that we get to keep it in our pockets and spend it on the things like we want, whether or not it's more business or just spending it on ourselves. That's our choice. Just because government parasites seem to think that they have a say in what we do, they don't. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful evening, and I'll talk to you next time. Adios.